Hello everyone. I'm Shalini Singh, Assistant Professor in Department of Commerce at James Engineering Management Technical Campus. So in today's class is the continuation of computation of profits and gains of business and profession. So this is lecture series 9 of unit 3. Let's begin. As in the last class we discussed about what is a business or what is a profession, and what are the incomes that are chargeable for tax under the business and professions, and few deductions also we discuss. So he will discuss the deductions in detail. Under section 30, the rent, rates, taxes, repairs, insurance or building which is used for the purpose of business, that is so the rent of premises is allowed as deduction. These are the special deductions which are allowed, and just a minute. So the rent rates are allowed as a deduction, and it is allowed as a deduction to all the SSCs. However, notional rent paid by the proprietor is not allowed as deduction, but the rent paid by the SSC to its partner for using his premises is allowed as the deduction. Then repairs, current repairs, if the SSC bears the cost of repairs, are allowed as deduction. However, the capital repairs incurred by the SSC are never allowed as deduction, whether premises is occupied by a tenant or a owner. Instead, the capital repairs are incurred shall be deemed to be a building, and it shall be the depreciation shall be claimed. So current repairs, if any sort of reparation is done in the building, then that and for that loans have been taken, then that is totally deducted. But if the owner himself is allowing cash, is using his cash for the maintenance and for reparation purpose, then that is not deductible under the profits and gains of the business and profession. Next is any sum of amount of any sum on the account of land revenue, local taxes and uh, local taxes or municipal taxes subject to section 43B. As per section 43B, deduction shall be allowed only if such sum is actually paid on or before the due date of furnishing or return, and insurance charges against the risk of damage or destruction of building is allowed as a deduction. So any sort of municipal taxes or local taxes which is accountable for land revenue, then that is allowed for deduction only when it is actually paid, and it has been paid before the due date of furnishing or filing of the return. And insurance charges against the risk of damage or destruction of the building is also allowed. If there is any sort of destruction, there is an insurance being done, then that is also deducted. Then repairs and insurance of plant, machinery and furniture under section 31. Repairs to the plant, machinery and furniture is allowed as the deduction. However, the capital repairs incurred by the SSC are never allowed as deduction, whether the plant is leased or is purchased. Instead, the capital repairs incurred shall be deemed to be an asset eligible for depreciation. So the repairs and maintenance of plant machinery is allowed as deduction under section 31. Premium paid for insurance against the risk of damage or destruction of plant, machinery or furniture is allowed as the deduction. So insurance premiums which has been paid for the risk of damage, those insurance premiums or insurance charges are deductible under section 31. Then section 32, depreciation. So in respect of depreciation, building, machinery, plant, furniture being a tangible asset, so if there is any sort of depreciation, that is also deducted. Know-how, patent, copyrights, trademarks, license, franchises or any other business or commercial rights of similar nature being intangible assets acquired on or after the first day of April, that is also allowed as the deduction. Insurance of the stock under section 36 subsection 1 Clause 1. So, amount of any insurance premium paid in respect of insurance against risk of damage or destruction of the stocks or stores used for the purpose of the business is allowed as discount. So, the any sort of insurance premium for the which is being made for the insurance against the risk or damage or destruction of the stock, that and which is related to the business, that is also allowed as a discount. Insurance premium on the health of the employee. Under section 36 subsection 1 clause 1b, the premium which is paid by the check by the employer in regards to the insurance premium for the health of the employees, that is also allowed as deduction, and premium is paid under the scheme framed in this behalf by the General Insurance Company of India and approved by central government, that is also allowed as deduction. Bonus or commission paid to employees under section 36 subsection 1 clause 2. Bonus or commission paid to an employee is allowable as deduction subject to certain conditions. Number 1, it is admissible only if not payable as profit or dividend. One of the conditions is that amount payable to employees as bonus or commission should not otherwise have been payable to them as profit or dividend. So this is provided to check an employer from avoiding tax by distributing his or its profit by way of bonus among the member employees to his or its concern instead of distributing the sum as dividend or the profit. So any kind of bonus or which is commission which has to be paid to the employees, that is a part of special deduction and it is allowed to the employees. Then deductible on payment basis, bonus or commission is allowed as a deduction only where the payment is made during the previous year on or before the due date of furnishing the return of income tax under section 139. Then under section 36 subsection 1 clause 3, interest paid on borrowed capital for the purpose of business or profession. As for Supreme Court judgment, the sum of money should be borrowed from another SSC and the loan may be borrowed from any bank, financial institution, government, public, friends or relatives. Loan may be in the form of debentures or deposits, and interest on capital or loan to the proprietor is not allowed as a deduction since the loan is not borrowed from another person, and interest paid by the firm to its partner on their capital contribution is all allowed as the deductions. Such borrowed money should be used for the purpose of business or profession, but where the amount of loan is used for personal purpose, it is not allowed as deduction. For example, the loan is borrowed for the payment of income tax and it is not allowed as deduction. However, the loan is borrowed for payment of dividend or sales tax is allowed as the deduction. So the interest has accrued during the relevant previous year. However, where the interest falls under section 43b, that is where interest is payable to banks or financial institutions, then to claim the deduction, such interest should actually be paid on or before the date of furnishing the return. That's all for today. Thank you.